All right, guys, I am back again with another video. And in this video today, I want to take time to show you a live trade I made day trading with Ichimoku and using the support and resistance of the Kumo cloud. So if you don't know what Ichimoku is, you can click on the button up top and watch a video for beginners, teach you all about Ichimoku and show you every aspect about trading Ichimoku. But in this video today, we just want to focus on day trading with Ichimoku, support and resistance levels of the Kumo cloud, and let you understand that, yes, you can still day trade using Ichimoku and still make a profit. This video will help you out pretty much. So stay tuned and watch how I made $3,000 in just a matter of minutes trading with Ichimoku on the S&P 500. All right, guys, here we go. Let's get into it. All right, guys, before I get started, just want to make sure you understand and see my disclosure statement, and just know that I am not an investment advisor. I am not giving you any trading advice. Everything that I do and show you today is for educational purposes. So if you decide to take up on anything that I do and anything that I am showing you, please consult with your own financial advisor so that you can help learn and know about the relevant risk factors. All right. So thank you very much for understanding that. And let's move on to the next thing. Now, always before I get started, I like to always give you some kind of encouragement. So today's encouragement comes from Ephesians 4:2, which states, "Always be humble and gentle, be patient with each other, making allowance for each other's faults because of your love." So no one is ever going to be perfect here on earth. So we must accept and love each other despite the faults of other people. All right. When we see faults in other people, our fellow believers, we should be patient and gentle. Is there someone whose actions or personality really annoys you? Okay, so rather than dwelling on that person's weaknesses or faults, pray for that person. Then do even more. Spend time with that person and then try to understand them and learn from them. Amen. All right, so basically my trade today was a trade that I was pretty much day trading and scalping the market using Ichimoku. Now, a lot of people don't believe that you can trade Ichimoku on a smaller time frame and day trade. And I really started doing that even more now because I'm trading a lot of the S&P 500 day trading, and it's one of the things that I incorporate because I want to be able to show and teach others how to do the same things. So my concepts don't really change. Nothing really changes. I'm just doing it on a lower time frame. So when we talk about Ichimoku, we need to understand what Ichimoku is. So I'm not going to go all over the rules about Ichimoku and tell you everything single thing about it because the trade was focused off of the Kumo. So if you want to know more about Ichimoku and trading Ichimoku, again, you could go right up to the top here, click on that, and you'll be able to learn more about Ichimoku, as I have a beginner video about Ichimoku, teaches you all aspects of Ichimoku trading. But I want to show you what Ichimoku looks like and what it is, and for those of you that really don't know. So here's a chart showing you what Ichimoku is. This is the chart where we see your cloud here. So this is going to be one of our main focuses, is this cloud right here. We're going to focus on this Kumo cloud and price. All right. We're not going to focus mainly on this TK crossover. We're not going to focus mainly on the Chiku span. We're using a 2000 tick chart to trade here. So we want to know and discuss things about this cloud before we even get into looking at the video. So let's look at, let's just review some aspects of the cloud real quick. So that shaded area between span A and B, it's the Kumo cloud. That's what you're seeing when you look at that chart we just showed. So using the cloud, it's going to be support and resistance areas. It's a support and resistance zone. So that's what we're going to trade it as. it's possible to check the trend of the market simply by looking at the position of the Kumo and the price. So if price is above the Kumo, it's judged to be bullish, and if it's below, it's judged to be bearish. If price is above the Kumo, then the Kumo represents support. If price is below the Kumo, then the Kumo represents resistance. We were above the Kumo, so that represented support for us, all right? So to judge the bias of the market, it requires a daily candle breakthrough. The thinner the Kumo, the easier the market can violate the support and resistance of the Kumo. But a thicker Kumo represents strong support and resistance and is therefore harder for the market to violate. All right, so keep that in mind. Where the leading span A and B intersect each other, this is called a Kumo twist, and there's likely to be a market turning point or a trend change or acceleration at that time. So when leading span A crosses above leading span B, this represents a bullish sign and shows bullish strength. So at the time we take the trade, we had a bullish Kumo cloud, which meant span A was above span B. All right, so we're going to look at that. You can see some of this stuff here. I'm not going to really go over that, but just here for you to understand and know. Then the next thing is my fast facts about the Kumo. So the Kumo is the shaded space, as we talked about, between span A and B. It determines market bias, all right? It identifies current support and resistance levels. Thicker Kumo represents higher volatility. Thinner Kumo represents lower volatility. Kumo future is the Kumo shifted 26 periods ahead to farm future support and resistance levels and future market sentiment. All right. And the Kumo shadows are flat clouds directly behind price for past consolidation or range levels. All right. They form support and resistance levels for us to trade off of. So let's talk about my settings. I just trade basically with the default settings. I use the Tinkinson I use the Tinkinson conversion line. The Tinkinson, which is your conversion line, as a 9. Kijinsen, which is your reference line, I use that as 26. And Seiko span A and B, your leading spans, I use that as 52 periods. All right. So when we talk about trading, a lot of times crypto traders change the settings to Ichimoku, and that's okay. That's based off of what they desire to do or what you desire to do, and they do that because they reflect that the market's open 24/7. So they believe you need to change the market from 9:26:52 to like 10:30:60, and some changes to 20:61:20, believing that this will reduce false signals, and that is not true. You will never reduce false signals in the market. There's always going to be false signals. The only thing you can do is control your risk. This is basically like saying I have a 200 period moving average, so the market's open 24/7. We need to change that 200 period moving average because the market's open 24/7. It's not going to calculate right if we don't change it negative. That's not true. So I don't believe that right there. But I mean, each person has their own belief. And I see a lot of crypto traders changing the settings and it works for them. So in this case, we're trading the futures market. So we're definitely not going to change anything, but I'm going to show you my trade. But first, let me go over some aspects of the trade. So I got into the trade. You could see this zone right here. The market was trending higher. We had a TK crossover that was bullish at this point, but then we crossed over and it was bearish. Okay, so you could see this bearish crossover. All right, but we also had an order block here. So this order block was lined up with this support and resistance. So basically the support of the Kumo cloud, which was really very important because the cloud was very thick. It had angulation on it. Now it's starting to flatten out here. So therefore we probably were thinking about maybe we're going to see a TK a Kumo twist, but I thought the market would be able to get to this upper level here, get a double top, and then drop to the downside, and then see this crossover and the market breakthrough with a Kumo breakout. Afterwards, it did do that in the meantime. So again, I'm going to show you another video. I'm going to show you how to day trade using Kumo breakouts, because I don't really trade Kumo breakouts on a longer term, but on a shorter term, where we're trading day trading the market or scalping the market, you'll see me attempt to take Kumo breakout trades. So I'm going to show that. But at this time, when we took the trade, the market was moving up, showing nice demand, right? So then we had a little correction here. This correction, we had increasing supply. But then at this point, we started to see increasing demand and diminishing supply, because basically we had this divergence here, and we're using basically this cumulative volume to show us that. All right, so it's the delta rotation indicator that I am using here on this chart. But basically what we saw was the support and resistance level of the Kumo first. That was the main thing. The thickness of the cloud, Then the second thing was this order block that we had here. All right. And then we could see the market bounce on this. I came in a little late because what I wanted to do, I did it. It happened to trade just the way I liked it because this first came down, then we came into this area, and then we came down again. At that point, I put my entry above this level, right at this level, while the market was down here. So I pretty much walked this zone, got triggered into the trade. You could see my entry here, and then here's my stop loss. So I'm going to show you my live. I'm going to show you the video of the live trade. So we'll bring up the video and we'll walk you through what's happening on the video. I recorded this whole trade. Moved up and made some good profit, bounced off of this level, was never really even inside the Kumo, so the market moved higher. So again, we saw this increasing in demand, diminishing supply. So taking the trade, we had a divergence in supply and demand. Basically, the price was increasing off of the level, which is increasing demand, and the cumulative delta showed a divergence of diminishing supply. As we see a very low red bar, this very low red bar, okay, and then a higher red bar right here, indicating an increase of demand and a decrease of supply. This helped me to take the long at the block support and the Kumo support level. That was some of my factors in taking this trade. So you'll see as we go through the video. So let me take you right to the video so we can talk about that and help you to understand what I did, and you can see what really happened during that trade. There's no voice, there's no sound on this video because I wasn't talking at that point, and you know, I have other things going on where I can't open up my mic all the time. So therefore, I wasn't talking at that point, but I'm going to lead you through the video now. Okay, so here we go. Let's get right to it. All right, so here's the video. I'm going to play this video for you. I didn't have any sound on, so therefore I have to pretty much talk about what was happening at this point, but I put the video moving now. So here we go. And pretty much you could see where now price came down. A couple of things, yeah. So I had the crossover right here that was bearish, and then Chico span was below price. So these are signs of a weak market, of a weak bullish market, and of course it was getting weak because we'll see. I believe I can show you later how the market. Now I just put my order in, so I just put my order in, 5 contracts for a long, and my stop loss is slightly below. I just moved my stop loss one tick below this level because I don't want to be right on this level, because you can see price likes to come right back to these levels. So I put my stop loss one tick below. All right. And now I want the market to come up and trigger me. So I did, a lot of times I'll trade the level, let the market come in, but I like to walk the zone. So walking the zone is what I'm doing here. I let the market drop. Oh, I can't move that. I put that up, but I let the market drop, and then I want it to come up to trigger me into the trade. Now here's what this shows you what's currently the profit of the trade at this point. Um, and what I'm looking at now is I'm holding support here at the cloud, which is very good. And this block right here, this order block, lines right up with the cloud support. And the TK crossover was a weak bearish crossover. So the strength of this crossover was weak, very weak for me to say, yeah, okay, the market's going to immediately drop. So a lot of times when you get that crossover and the market, you could see the cloud just flattening out. We don't have any kind of Kumo twist yet, but the cloud did flatten out a little bit. So with the cloud flattening out right here, I'm looking at the market attempting to make a double top here, I would believe, and then drop back to the downside. With the Kumo breakout, we would change our bias. So when I'm trading, especially day trading, I'm using a 2000 tick chart. All right. So with the 2000 tick chart, I don't pay much attention to the crossover much. What I pay more attention to is the bias of the Kumo. So if I'm above the cloud, I'm going to be long. If I'm below the cloud, I'm going to be short. Now I do pay attention to the bias and to your Chico span and so forth, but it's with the trend. Against the trend, I want to just basically, I'm trading based off of what I see the bias of the market is. Now, if we get inside the cloud and then we break the cloud, then I'll change my bias to bearish. All right. But I'm not going to wait for the crossover and everything again to get into a long trade again. At this point, the reason being is because I'm just trading the bias of the market. All right. And right now, the immediate bias is bearish here, but the overall bias is bullish. So this to me is just a correction, and therefore I'm going to take the long trade, which I did. And again, we talked about the divergence here, the delta divergence. Um, that's all I see here. And basically now I'm going to let my trade go. We continued to reject this level. I feel pretty good. If we would have broke through, we've got stopped out for a small loss right here. Now the market, I'm looking at the market creating a double top up into this area, and then that's a good area to take my profit, right? Because now what I started to worry about was I was getting good angulation on Tinkinson and Kijinsen. So at that point I was worrying like, okay, so this crossover is going to lead to the market falling and breaking through the cloud, and then we'll see it. I'll get stopped out here, and then the market will continue to the downside. I kind of felt like there would be some weakness, but now I didn't see a lot of divergence on my delta. Now here we go. We're looking at the profit at this point, pretty decent. We're just pretty much scalping the market, so we're not looking like we're not thinking we can make a big run like this. All right, because it's kind of hard sometimes, but we could depending on how we manage the trade. In this case, we didn't manage the trade to get a run like that. And I'm also taking notice of the higher time frame, looking at that daily time frames, marking support and resistance levels, and understanding what the bias of the daily time frame is. So this trade is looking like okay. I'll show you when I start to really feel safe. Now I felt all right with the rejections here because I figured we need to make a lower low, and we're not doing that at that point. Here was my low, and we never made a lower low, lower than this point or lower than this point. All right. So I'm just chilling, sitting here, watching and enjoying the trading day. Okay. So most people wouldn't probably take the long here because they're concerned about the TK crossover and Chico span below price. All right. So those are bearish signs, but the market's not going to, Ichimoku's not going to move as fast as this 2000 tick chart, which is extremely quick. All right. And it all depends what the volume of the market is at this point for this chart. But you can see now we're steadily making higher lows. All right. So a low here, low here. Now we're in good position. So we probably looking at the market being able to get to this level. All right. And holding support of this Kumo. This Kumo never failed us. We never closed inside the Kumo. So that was strong support. Thick Kumo, strong support. Flat here, leading me to believe that we may not go much higher than this level. Flat cloud. But we're starting to see a little bit of angulation on span B. Span A still a little bit flat. And then we're at 11, 13 right now. And we kind of wanted to see if we can get to this point. Now, 16, we're pretty good still. And I probably could have managed this trade a little better just by moving the stop loss up to the lows, but I'll show you what really triggered me to get out of the trade also. We're hitting this level. All right, so this is a support and resistance level. So a good resistance level, double top, and we had that bearish crossover at that point, and now we just starting to get a bullish crossover with angulation. All right, I'm in ahead of that, but I don't believe we get through this level because of the way the cloud was flat here. But now we're starting to see angulation, so it's a possibility that the market could move higher. Now we're at like 22.50, 23, and we're almost breaking this level. This level is about right here. All right, so at this point we're at 3,000. So 3,000, getting ready to take that profit because watch, I think the next candle really triggered me to take the profit. Looking good. I could have moved my stop loss up to this point, right? To below this candle here at this time. But now this candle is what got me. And I did move my stop loss up just a little bit past even, but now I'm going to tell you about that also. So at this point right here, we're starting to drop. We're at the 3,000 point. Then this started showing me indecision. I think this is where I'm taking the profit. Indecision. I like to move my stop loss up to indecision. At this point, I took the profit because and I also want to see if we have divergence. So I took the profit already. You can see it's closed out. Took that 3,000 profit. The market pushes up a little bit higher, but eventually we get a Kumo breakout to the downside. All right. So this is done. we stopped recording, and now it's starting back over. So no need for us to watch it over again, right? But basically, again, what I also was looking at, so if I can show you when the market pushed higher, wanted to see if there was divergence here. Because if you have a divergence here, then we're starting to see increase in supply and decrease in demand. And therefore we see the market drop to the downside. So I wasn't able to show you that with the position indication in the way, and we weren't able to look at that at that point. But that would have been another thing to look at. But that was the trade, all right? So that's how it worked out. And it worked out this time. And I'm going to be showing you plenty more day trading videos with Ichimoku. So I want you to be able to trade with Ichimoku. But Ichimoku is not my only thing. I'm not just an Ichimoku trader. I'm a trader. So I trade all aspects of the market, all different types of technical analysis. So don't confuse me with just being an Ichimoku trader. But here, I showed you some aspects of trading Ichimoku, and hopefully it helped you. All right. So guys, I'm all done. So till next time, hope that helped you, and have a great one. God bless. So long.